It's time now for Futures in Focus. Let's get down to the CME and to Bob Iaccino of Path Trading Partners. Bob, we got a little bit of a surprise once again today from crude oil inventories, and a barrel of WTI was already pretty close to $58. What's the direction from here?
Well, I think when you look at the crude oil inventories, you're getting a little bit of a lead from refinery utilization, which crept up last week, telling you that we would get this style of a surprise from those particular data sets. The other point to make, I think, is that from a price action perspective, which is not really what I look at primary in terms of crude oil, but we're breaking out in a typical fashion. When crude oil falls, it falls pretty consistently. When crude oil rallies, it rallies, goes sideways, rallies, goes sideways, and we're breaking out of another one of those sideways channels if the price action continues. And lastly, we got a pretty big jump, almost a gap, which you don't see with the 24-hour nature of the crude futures, 23.5 hours. We got a little bit of a gap up after the durable goods orders as well. So that was kind of simultaneous, only about 45 minutes earlier than the EIA figures. But this is all bullish. And then later in the week, we got the IEA report and the OPEC report. The OPEC report is much more widely read, and it also tends to lean a little bit more aggressive on the demand side. And basically, bullish is what I mean by aggressive. The IEA is the other way around.